Have you ever dreamed of money flowing into your bank account while you sleep, while you travel, or even while you're doing absolutely nothing at all? Imagine waking up in the morning, checking your balance, and realizing you made money overnight. Sounds like a dream, right? Well, let's be honest. That dream has been sold to you 1,000 different ways through YouTube videos, online courses, TikTok hustlers, and best selling books. But here's the truth: there is no magical money genie. Passive income, as it's often pitched today, is a fantasy. The idea that you can just set it and forget it and watch money pour in forever is misleading at best. And at worst, it's a trap that keeps people chasing shortcuts instead of building real wealth. In this video, we're going to cut through the noise and reveal what passive income actually is, why most of what you see online is smoke and mirrors, the real ways wealthy people build income streams that keep paying them for life, and most importantly, how you can adopt the millionaire mindset to build financial freedom step by step. Stay with me until the end, because the truth will completely change how you view money, wealth, and your future. The myth of passive income. Everyone wants passive income, but very few people actually understand what it means. The internet makes big promises. Start a YouTube channel and retire by 30. Launch a dropshipping store and make 10 grand a month on autopilot. Buy a rental property and let the rent checks roll in. Sounds amazing, right? The problem is these stories leave out the messy reality. Growing a YouTube channel, that takes years of consistency before it earns real money. And even then, most creators make pennies compared to the top 1%. Dropshipping, that's not passive at all. It's customer service emails at 2 a.m., advertising accounts getting shut down, and suppliers ghosting you from halfway across the world. And real estate? Sure, it can be lucrative, but without systems and serious capital, it's basically another full-time job disguised as an investment. Leaky pipes, bad tenants, endless repairs. Trust me, it's not as effortless as the gurus make it sound. Here's the harsh truth. Most so-called passive income is just active work that you do up front, hoping the payoff comes later. The work isn't eliminated, it's front-loaded. And ironically, passive income wasn't even created as a wealth strategy. It was born as a tax classification. The IRS backstory. Let's rewind to the 90s. In 1986, the IRS introduced the term passive income. But it wasn't about financial freedom or money while you sleep. It was about closing a tax loophole that wealthy people were using to dodge millions in taxes. Here's how it worked. Imagine you're a lawyer making $500,000 a year. You invest in a real estate partnership, but you're not actively involved. On paper, that property shows a $200,000 loss thanks to depreciation, interest, and accounting tricks, not because the property failed, but because of paper write-offs. Now, you take that $200,000 loss and subtract it from your $500,000 salary. Boom. You only pay taxes on $300,000 instead of $500,000. You didn't lose real money. You didn't lift a finger, but you slashed your tax bill. The wealthy used this trick, called the passive loss loophole, to avoid paying millions in taxes. The IRS saw it happening and cracked down. They said, "From now on, you cannot use passive losses to offset active income." And just like that, the legal category of passive income was born, not to make people rich, but to protect the tax system. But over time, marketers twisted it into a dream. Passive income became a buzzword, a symbol of freedom. The fantasy of money for nothing. And that fantasy has blinded millions of people to the actual truth. There's no such thing as money for nothing. The reality of cash-generating assets. Here's the mindset shift you need to make. There is no truly passive income. What actually exists are cash-generating assets. Assets don't appear out of thin air. They take capital, time, or expertise, usually all three. So instead of asking, how do I earn passive income, let's ask, how do I build or buy an asset that produces cash flow? Let's break down the 5 main ways people do this. Dividend investing. This is the classic example. You buy shares of a company, and in return, they pay you a portion of profits called dividends. Companies like Coca-Cola, Apple, and Johnson & Johnson do this. Sounds simple, right? Buy the stock, hold it, and cash the checks. But here's the catch. Most dividend yields are between 2% to 5%. If you own $10,000 worth of dividend stocks, you might earn $300 to $500 a year. That's not financial freedom. That's one nice dinner a month. To make serious money, you need serious capital. $1 million portfolio at 4%, that gives you $40,000 per year. Now we're talking, but notice, you didn't escape the work. You just paid for it up front with money. Real estate. The internet loves to call this passive. Buy a property, rent it out, and collect checks. But ask any real landlord and they'll tell you it's not that simple. Tenants miss payments, toilets break at 3 a.m., property taxes rise, insurance, vacancies, noisy neighbors, new regulations. This isn't passive. The wealthy make it passive by building systems. They use leverage to buy multiple properties. They hire managers, accountants, and contractors. They treat it like a business. That's the lesson. Real estate can be passive, but only once you scale it, structure it, and treat it professionally. Royalties and licensing. This is income from your ideas, books, music, patents, digital designs. Anytime someone uses your creation, you get paid. Sounds glamorous, but here's the truth. Royalties scale with exposure, not just quality. Mariah Carey makes millions every Christmas from one song. But she wasn't a nobody when she released it. She had global brand power, a record label, and cultural momentum. If an unknown artist released the exact same song, it would have gone nowhere. Royalties are powerful, but building the platform to make them meaningful takes years of branding, marketing, and leverage. Digital products and content. And create it once, sell it forever. That's the dream sold by online gurus. Yes, technically, content or courses can generate income long after you've created them. But here's what people forget. Without an audience, your product dies in silence. Digital products have short shelf lives. A course or video might blow up for a week, then fade into irrelevance unless you keep creating. Think of it like a blockbuster movie. The majority of the revenue comes in the first few weeks. After that, it drops fast. So yes, digital content can be a cash-generating asset, but you need consistency, attention, and a long-term strategy. Private equity and partnerships. This is the model wealthy people love most. Instead of building a business, they invest in one that already exists. They become limited partners, no day-to-day work, just a share of the profits. Returns often range from 8–20% a year, sometimes more if the business is sold at a higher valuation. But the barrier? Capital. Minimum investments usually start at 6 figures, and the money is locked in for years. This is why the wealthy keep getting wealthier. They have access to these deals while the average person doesn't. The hidden cost of passive income. Now here's the truth nobody likes to admit. Passive income isn't free. It costs you in one of 3 currencies. Time. If you don't have money, you pay in sweat equity. Writing, building, creating, pitching. Capital. If you don't have time, you need cash, often in large amounts. Systems. If you lack both, you pay for automation, delegation, and infrastructure. The wealthy seem like they make money doing nothing, but that's because they already paid the price. They built the asset, they bought the asset, or they created the systems years ago. The truth about passive income. Here's the mindset shift that will change everything. Passive income is not for getting rich, it's for staying rich. If you're not already making good money, chasing passive income is the wrong focus. First, build active income. Save aggressively, invest wisely, buy or build assets. Everyone has a monthly burn rate, the money you need just to maintain your lifestyle. Most people cover that by working, but true freedom comes when your assets cover it for you. Not because you found a shortcut, but because you built your financial foundation with intention. So stop thinking of passive income as a jackpot. Instead, see it as a firewall, a safety system that protects the wealth you've already built. Passive income isn't magic. It's not luck. It's not instant. It's the result of years of building, saving, investing, and creating. The people who are truly free didn't stumble into it. They lived below their means, they built assets, and they used money as a tool instead of chasing shortcuts. If you want freedom, start there. Build active income, save aggressively, learn the game of money, invest in assets. Over time, those assets will buy back your freedom. And when that day comes, you won't be chasing a fantasy. You'll be living the reality. If this video gave you a new perspective on wealth and passive income, make sure to hit that like button, drop a comment sharing your biggest takeaway, and subscribe for more videos on personal finance, wealth building, and the habits of millionaires. Your journey to quiet wealth starts here. Thanks for watching, and I would see you in the next